Eric Muathe with Muathe.com. Let's take a look here at the London Stock Exchange stock, KAZ Minerals, KAZ. And we can see here that over the last year or so, the stock has had a fantastic run, coming from the lows here in October 2015. Let's call it about the mid 60s to the current highs here of about 420. So the question that was posed to me was whether one can take profits or whether they should wait for the stock to move higher. In other words, should we take profits here, get out? And the question comes from a different perspective. We can obviously see that if you own this stock here and it's had this major run, clearly you should have been getting out of this position during all this movement to the upside. In other words, if you owned 100 shares, you'd be out. Maybe you'd be left with about 15 shares, who knows, but you would have sold or should have sold throughout these runs. Okay, but the question comes from a different perspective, and I'll explain that here in a second. If you take a look at the stock from a weekly standpoint, we can see that it's had a nice run. Even we can see there have been periods of good breakouts. For example, here, good breakout, so let's call it there, as you can see there. And then there was also another breakout on the weekly chart right there. So lots of entry levels here. Stock has done well. I would expect the stock to be okay as long as the RSI on the weekly is holding above 69.1. So let me explain to you why this is a different perspective question, because the question actually is whether someone should continue holding this stock if or since they bought it somewhere here in the 700s. And that becomes a very tricky question, because clearly, as we've seen, if you bought the stock lower, likely you should be getting out or should have got out throughout this entire run. But if you bought the stock, let's say here, now you're stuck with a very odd position. What to do? Do you wait to see whether it can move higher so you can get out with a smaller loss, maybe at 500 or maybe 550 or 600, or maybe if you're lucky, it might tag that $700, or who knows, might go on to trade above that? It's a tricky question, and so I don't have the best answer other than to say that we have to still rely on the same chart. So if you got in the 700s, let's say somewhere there, the problem that I see in the chart that could actually suggest that this is where it could struggle is you take a look at where the stock is coming to now on the RSI. Seems to me that it is now coming back to test this line. And so I think if you take a look at where it is starting to move low on the daily, it could be that eventually on the monthly it is coming back to show a test of this line. So here we had resistance for the highs there, and now we are just slightly above that. So the key is, if we roll over with uniform action below that red line, then I would speculate that around here in the lower 400s it could be stalling. So that's one thing you can watch for as a sign of getting out, or at least taking some losses here in part of your position, because you don't know that you're going to get any movement above the current highs. So you can start paring down your losses, of course, right? Now, that is the bearish scenario, that the stock rolls over and shows resistance on this red line with uniform action, just like it did during this period here. And in fact, actually, if you test this line by going backwards, you also see that once it broke down to all-time lows here, it dropped, and dropped significantly, actually, coming here from the 1400 level all the way to the lows here of about, let's call it, under 200, after it broke down on the RSI here. So this level on the RSI has been a problem. In fact, even we can see here, this was double top rejection there for the highs here and here. So let's do that one more time. Same line that could, I think, pose problems here. Straight right there. You can see break for a major sell signal, double top rejection here for the highs here and here, and then again rejection here for the highs here. Now the question is whether it can hold above the red line. The key to whether the stock can actually move well above the current levels, and this is what I was telling you by email, is the key is whether it can move its monthly RSI above 69.1. If it can find some way of staying above 69.1 on the monthly, then I would say that that would suggest that there is a possibility that it could actually see higher levels beyond the current high of 430. So the key is whether we get one or two options here. Option number one is you'd like the stock to stay above 69.1 to show that it has the possibility of moving and advancing beyond current highs. Number two is a bearish situation, and this would be confirmation of rejection with uniform activity back below the red line. And if that happens, if that confirmation takes place on this line here, confirmation of rejection would suggest that now chances are we might not see these highs for many months. Hope that answers your question. It's a tricky situation, one that happens sometimes. So easy to say that if you bought it here, you can sell here, easy. But in a situation where you bought the stock at higher levels, now you're looking to see whether there's a chance that it can clear the resistance level that we are discussing here. If it can clear this resistance level and trade with the RSI above 69.1, that would be your best scenario, that it finally moves above 69.1. But I think on a monthly chart, rolling over here back below the red line would be a major signal, and personally I'm leaning to that scenario, but we shall see. Eric Muathe with Muathe.com. As always, good luck, peace and blessings. EACS.